Welcome back. This is Chile Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. Thank you for taking the time to stop by my channel and check out my content. Today, we're going to talk about a couple of stocks that will report earnings this coming week, and I'll be pretty brief. The first ticker symbol we'll talk about is Constellation Brands, which will report on the 6th. And then the second stock we'll talk about is Domino's, which will report on the 14th. And the last ticker symbol we'll talk about is Netflix. Netflix will report on 10/19. So almost 2 weeks, but we're going to talk about these three because I know many people know Netflix and Domino. So we'll just take a look at the stock. Constellation Brands is a beer stock. So Constellation Brands, a Fortune 500 company. It's an American producer and market of beer, wine, and spirits. It's the largest beer import company in the United States, measured by sales. So if you look at the year over the last year, Constellation Brands, ticker symbol STZ, has been up over 16%. Now that's since last October. It has been up 16%. But if you look at the year to date, they've kind of been flat or a little under. So they opened the year at 216 and they are down at 213. So Constellation Brands is a great company. Like I said, it's the largest beer importer. And even if they just keep their price flat, that's not a bad deal because they still are doing great things. So this market watch says Constellation Brands stock outperforms competitors on a strong trading day. So we look at the 52-week high, it's 244, and it's only right now trading at 213. So we'll see if it can get back to that 244. On the other hand, it has a low 52-week low of 160. So we'll keep an eye on Constellation Brands and see what they have to report this week on whether they beat revenue expectations put by the analysts on Wall Street or whether they fall under. But right now, the stock has been pretty flat for the last year. Let's look at the last 5 days. Okay, so the last 5 days, they've been up a little bit. If you look at since September 27th, they were trading at 212 and they're slightly up at 213, 215 per share. And then over the last month, the stock again has been slightly up from 209 to 213. So pretty much flat. But if they have good news during the earnings call, the stock may pop a little bit. And like I said, it has a 52-week high of 244. So even if it moves from, let's say, 214 to 220 per share, that might be a good move. But they are one of the largest beer import companies in the U.S. So this is Constellation Brands. They report this week. Check them out as well. All right, my next stock I have is Domino's. Domino's was one of those companies that did well during the pandemic because people were shut in their home and they would just push a button on their app and they could order pizza or they could call in or do it online and then touchless, they could pick up their pizzas. So Domino's brand has been doing great over the last year. And I'm pretty sure many people are familiar with Domino's. They've had these different programs where you get your pizza free if it's not delivered in 30 minutes, this type of thing. I wouldn't say they're the best pizza, but they do have a lot of good promotions and the taste is fairly decent. Okay, so the stock right now, it opened the year at 379 and its high is 475. So it's over 25% in 1 year. That's excellent for a stock. Even when the year isn't even over, they made over 25% this year for 2021. The stock has a 52-week high of 548 and a 52-week low of 319. But I feel with a lot of people not dining at home, that Domino's may be a lesser option because more people are going out to your traditional diners like Olive Garden and the likes, Applebee's and such. If you're thinking you could possibly get in a Darden's. Darden's is a stock that does with Applebee's and Olive Garden and the like. But anyway, yeah. So we have Domino's that will report later this month. Right now, trading at 475, and it has a peak of 548. It's still performing pretty well. If we look at the last 5 days, it's been trending down. So it was 488, and it's gotten as low as 476. And I think I was familiar sometime during the pandemic. I think you could have still got Domino's for $300 per share. I don't know that, like, as far as the technology to come have, they do have a lot of technology. In some cities, they're doing, like, I guess, robo deliveries, autonomous driver deliveries. So you don't want to count companies like Domino's out. So depending on what they do this quarter for revenue and sales and margins, they could come out with a lot of great information during the earnings call. And then also moving forward, they could give good guidance. We do not know what Domino's has in the bag, but I mean, this could be the beginning of something else. So like I said, they have a 52-week high of 548, and they're still only trading at 475. But if I was to look at this stock for the year, they've done pretty well. Over 25% growth in 1 year, Domino's brand has done. And I think they're still hiring. So that's one of the cool things. Market Watch says Domino's pizza stock underperforms Friday when compared to competitors. That's interesting. And then Yahoo Finance says Domino's pizza brand a small long-term questionable. So check out Domino's. And the last stock I wanted to talk about was Netflix. We're all familiar with Netflix. They have some of the best movies and shows, and they're out of California, Scotts Valley area, Los Gatos. And they are trading at 613 per share. And if you look at them over year to date, since January, the stock was trading at $500 roughly at the beginning of January, and today is trading at over $600 per share. So the Netflix leadership team and executive team had done an excellent job managing the company. They also have new video game possibly coming to the platform. So we'll see what Netflix has to offer. Again, they've been up 17%. They report later this month. They have a 52-week low of 463. Now, here's the only thing I don't quite get is they're already maxing out at 619, the 52-week high. So, of course, if you want to get involved in Netflix, I'd wait for a pullback. But who knows how soon it's going to pull back. Again, they have earnings call later this month, and let's see how well it goes. Here's some ideals here. One day ago, AMC soars, Disney resets, Netflix rebounds. Florida man gets a Netflix show in North Carolina. Interesting. And then South Korea's broadband firm sues Netflix after traffic surge from Squid Game. Okay, so that's interesting. But again, Netflix is getting into the video game playing. So now are they doing movies? They're doing video games as well. So we'll see how that works out. Again, they report later this month, and we'll see how well they did on earnings. Also, they have been known to grow inside the U.S. They are trying to expand their international market as far as subscriptions and margins, going up on the rate of the subscription. So we'll see if Netflix has done that over the last quarter, and then what their guidance is moving forward for the next quarter. So those were the three stocks I wanted to talk about. Was Constellation brands that report later this month, Domino's, and Netflix. Also, I wanted to talk about really quickly, I found this chart. I'm a big reader of Robert Kiyosaki and Rich Dad, Poor Dad. And I found one of these charts that shows why, so many people struggle, especially the middle class, why they struggle, according to Robert Kiyosaki's cash flow game. And the main reason, as you see, most middle class income people, they predominantly get their income from a job from a salary. And as you can see, their expenses go right out immediately, while a rich person, they derive their income from rental income, dividend income, interest, and other royalties. And those are derived from assets. And that is real estate, stocks, bonds, notes, and other intellectual property as such. While, I mean, they still have these liabilities on their balance sheet, mortgage, consumer loans, but their main money is derived from assets. And the middle class often do not have but few assets. And then the poor derive their income from jobs as well. And most of their salary is eaten up again by taxes, rent, food, and transportation and clothes. A little bit different than middle class, but they still are suffering from none of their income coming from a second stream or an asset such as real estate, dividend stocks, bonds, or notes, or intellectual property. So again, this was just a quick video about 3 stocks to watch from Earnings Whisper, Netflix, Domino's, and Constellation brands that report later this month. So I want to thank you for watching. Thank you for listening. Please like, share, and leave your comments below.